Okay, seems like we are online, and we will wait a couple minutes, maybe 1 minute, and we will start. So yes, we are starting. Please, everyone who is with us, please put something in the chat, some emoji or plus something, so we will see that it's working. Yeah, it's working. We have people inside. Great. Let me start with like introduction, I believe. I am Vadim Rozov. I am CEO of Simplify Labs. I truly to welcome you on this webinar on a topic that, like, I believe everybody was waiting for last year, and we can see it right now. MiCA is in place. It started, and we can see the first progress on it, first results, and I believe like everybody here interested in first of all how to receive MiCA, second how to apply the process and everything, and second what to expect from the MiCA. And I want to introduce our guest. It's my friend Kevin Plumpton. He's CEO of Kyrrex Exchange. Kevin has been at the forefront of addressing regulatory challenges in the crypto space, and under his leadership, Kyrrex has been actively working to align with MiCA requirements. Kevin will share his first-hand experience of negotiating these challenges and solution, which allow, first of all, technical and regulatory solution. Simplify Labs and Kyrrex has implemented to become MiCA ready. We also will discuss partnership, what Simplify Labs can provide and what Kyrrex can provide to the companies who wants to meet compliance obligations. Kevin, you can say a couple words from your side, and we can move forward.
Yes, Vadim, thanks for the intro. I'm excited to be part of this webinar. As all previous webinars we had, they're always very interesting. As Kyrrex, we are truly also very excited about what is happening now in Europe. Before we were talking about the future, and now finally we are talking about the present because the member states, the NCAs, we call them, the national competent authorities of the member states, have started already processing MiCA authorizations, and we have seen the first few, very little, but the first number of MiCA authorizations being issued. Obviously, it is the very, very, very start because 31st December was the deadline. 30 when MiCA started being enforced and applicable. So it is also early days to even comment on is it working, is it not, how is it being applied. So for now, we still have to remain, let's say, vigilant and focused on what we see as we go along. But as per previous webinars we've had, we can discuss what to be expected in these days and what we shall be seeing or hopefully understanding better in its implementation in the coming now days, because we're already seeing it being implemented. So this is very exciting times for those who are MiCA ready, and for those who are not MiCA ready, or let's say are still trying to understand, this will be a good opportunity today to have this discussion and to contribute from my end as much as I can to have a fruitful outcome today. So looking forward to the questions and the conversation, Vadim.
Yeah, I want to start this conversation with my own exploration about the market. We were not sure about how it will be implemented, and from the first day, it will be some, for example, closing of thousands of companies and some collapse on the market or something like that. We don't see it. and it's a good news, I believe, for the market itself, because it will be a huge impact on the price and about the like overall crypto market itself. But I can say that many European big players already talking about the MiCA, about how they're changing travel rules, how they're applying this, how they're changing the flow for the European customers. And I believe the promotion and advertising changed for most of the players already. And Kevin, from your point of view, do you see some big difference in approach to the European market from the like big players?
First of all, definitely there is a maybe not surprising because we are used to it. We're already seeing a different approach in the regulators and which licenses they are prioritizing to start with, because the big players are the ones who are, let's say, being prioritized. But I think that this is not necessarily negative in the sense that, as you said, the market needs to be also secured, that the implementation is as widespread and as let's say uh, let's say adopted, mass adopted as possible, and that the consumers can feel its effect as fast as possible. So going with the big numbers and the big players might be an approach that can change the even perception out there, which is a challenge now for all European regulators to make sure that everybody is actually endorsing the implementation of MiCA, and not just the CASPs or not just the token issuers, but also now the infrastructure around us. So all CASPs and even certain token issuers have to work within an ecosystem that could include, for example, even traditional financial institutions. Let's talk about banking. Let's talk about payment processing. Let's talk about all these integrated parts of what it means to be a license holder will now need to change their point of view. What, however, is the reality is that it's a bit too early to say it has changed. I think everybody is waiting to see this change and everybody is excited to see it implemented. But for now, it's like a bit all eyes are on the regulator to see which are going to be the approved license holder and what is going to be the process, because it is something new. Obviously, it is never been done before. It is the, let's say, biggest market that is going to be created in terms of states that agree on a law, not in terms of numbers, but in terms of states that will come together for one single market legislation. So everybody is waiting for the implementation. I already see a change. Let me explain why. And this is to the benefit of everyone who might be skeptical about MiCA. It's true, MiCA does give a lot of requirements and make it a bit harder. The standard is higher if you are used to being operating in a less regulated market. Even some member states had much less standards than MiCA does. However, when you go to approach a bank, or you go to approach a payment processor, or you go to approach, let's say, the rest of the ecosystem that you need to operate, there was always resistance to approved for customer due diligence, for your, let's say, onboarding, for them trusting you with your deposit limits and withdrawal limits, etc. All this we are seeing a change in. If you are MiCA compliant, then you have that stamp of approval that can help you obtain more trust. So there is this change, Vadim, already. But I think everyone is hesitant to wait, that there are no fouls now, that no faults will be adopted initially. So it's an expecting game right now. But there's already a change, yes.
From the customer point of view, I want to share that not long time ago I received this email from the OKX that they are applying travel rules to all their customers, and right now you can deposit or withdraw money without providing all necessary information about recipient and receiver of this transaction. So this is already working, and what we've been providing to our customers from the day one to the Kyrrex platform. It's forced to be implemented also on the other platforms at this moment. And this is what I see from even from the customer point of view. And we will talk about this a little bit later, about technical requirements to the platform, what should be implemented and what's the difference. And I would just want to start with a small agenda and question to the audience. Can you type in what countries you are operating in right now or registered in, so we can see what we are talking about what country, and be more specific. Poland, Ukraine, okay, Bulgaria, okay. So Malta, cool. Okay, I'm not sure about the Ukraine. Is it will be applicable? But in general, all European countries, and if you want to operate in European Union, you should receive this license in general. And Cyprus, Lithuania, cool. And I have prepared small checklist for everybody who is attending this webinar, and later on I will share with you how you can receive it. It's like, is your company ready for the MiCA? And from the operational point of view and from the technical point of view. And we can discuss, for example, from the system technical point of view. First, let's make like small chit-chat game. I will ask you questions, and if it's positive, you put plus, and is it negative from your point of view for your company, you put minus. So let's start with a simple one. Do you have effective IML framework in place for your company? IML policies. You can put plus or minus. Cool. Katerina, plus. Evgen, plus. Okay. So this is like a first layer, and if you have it, we can move forward from there. Is your IT function and infrastructure defined in writing, like organizational chart, responsibilities, system architecture? To apply for the MiCA, you should have this. Do you have it in place? Okay. I see Katerina doesn't have. Okay, guys, let's move forward. This is a checklist you can receive after the webinar. You can book a meeting with me. It will be shared later, all contacts. By the way, you can also, if you have idea about cooperation with the Kyrrex in the future, you can contact Kevin through email, and also contact him about sub-licensing or over LinkedIn, and ask your questions directly. Let's move forward with our presentation plan. So let's talk about technical requirements for the platform you should use to apply for the MiCA. Like, first one is, I want to repeat myself, we are in Simplify Labs providing white label solution for centralized exchanges and OTC desks. And with this solution, you can apply it for the MiCA. And what's the difference between before MiCA and after the MiCA? Like, I want to mention 6 main items which is important to implement in your solution, and start with KYC KYB process. If previously it required less questions to be obtained from the client, at this moment it's the bigger list of information, and it's include personal contact information, as previously identified documentation like passport or driving license, and then additional questions is like risk-based, like questions related to the risk base for the PEP screening, question regarding the financial information, and regulatory compliance declaration. So this previously was not required to collect to, but at this moment, even to proceed with the first deposit, you should collect all this information and securely store in your system. For the dynamic customer risk profile, this is a system which allows to based it on the previous step provided KYC information. It allows to put the customer in some risk profile and apply different rules to the different groups, and base it on the for example, let's say about the risk factors. It's a geographic location, customer type, channel or delivery, some transactional patterns, source of funds, like PEP status, business types. So based all this information, customer after the registration put in some basket, and later on, based on their behavior, risk type can be changed. And based on this risk type, the most important, we apply personal thresholds to each customer. So if it's low risk customer for low risk jurisdiction with like high, for example, with proven source of wealth, it will be like higher personal threshold limits. But from the MiCA point of view, for each customer, it should be applied. So it's impossible to make just infinite deposit without no limits, for example. So each customer should have some limit based on previous provided information. And in case this threshold exceeded, some system should trigger some alert, and the MLRO officer should take actions based on your policies. For example, ask for additional information, or even put a customer on hold, and so on and so forth. Next, it's a transaction monitoring system. It's automatic system which track every transaction inside the exchange, and based on the action, we are talking about dynamic transaction monitoring thresholds, activity pattern analysis, risk score updates, of course, periodic review of the customer behavior. Some monitoring triggers in place. So based on the your company's risk appetite, these rules can be changed, but it should be in place and approved by regulator. What other level of difference is, of course, KYT and IML in general. It should be, of course, real-time monitoring. Every transaction on the platform, every deposit should go through KYT and IML system. Second, it's pattern recognition. In case, for example, if your customer has monthly or daily limits and want to exceed this limit by making small withdrawals or deposits, and it should be automatically detected and prevented. We are talking about KYT not only for on-chain operations, but for fiat operation and deposits also. And on top of it, it should be case management and alert system in place for your system. And the last one, most interesting, I believe, change at this moment, it's travel rule implementation. Most if we're talking about like overall idea that every transaction should be marked. Every centralized exchange who want to apply for the MiCA should understand where funds going from and going to. And what you can think about is a bank transfer. So bank always know where this money goes to. You define it as like recipient of the transaction, and the same approach should be implemented in your crypto solution. And at this moment, of course, on-chain operation and the idea in the like basement of the blockchain that it's anonymous and you can open your non-custodial wallet at any moment, new one, and send funds to it. Really not against the idea of travel rule. But it works on the level of declaration. Customer should declare that this wallet is mine and I can prove this. And later on, any transaction from this wallet and to this wallet will be marked as a transaction to this user wallet. This is main 6 difference I want to highlight it today on the webinar about the technical solution you should implement to apply for the MiCA. Of course, it's some more questions regarding the technical solution in general and to the operation management of the MiCA ready exchange. And we will talk about this on the next slide on the webinar with Kevin. Kevin, please. And by the way, if you have any questions regarding the technical part, please write it down, and later on the end of the webinar, we will read it and answer. Kevin, please tell about your experience with applying to the MiCA and how to be ready for it.
Okay, so first of all, there is obviously all the points that you have mentioned that I do not want to stay duplicating the same information. Maybe from a broader point of view, and to incorporate, let's say, the general framework as well for people who are considering, I would say, maybe submitting their own application or understanding how it is being assessed. CUSPs must obviously have a registered office, and not only a registered office, but also an effective place of management within a new member state. Probably many applicants would already have, let's say, set up an office or have some form of license or set up within Europe most of the times, given that MiCA is more of a transition than something completely new from beginning to end. However, it is important to note that there is a caveat that comes with MiCA, which is this, that whilst MiCA regulation allows for different member states to allow their licensees in that member state to continue operating throughout a period of time until MiCA is fully enforceable, and we call that period of time the grandfathering clause, so that you understand me now what I am going to say. The grandfathering clause was left to each and every member state to determine up to a maximum of 18 months. Now, the authority of Europe that is overseeing its implementation has suggested that 18 months is too long and it should go for a shorter period. However, we do have, let's say, a list of grandfathering periods that has been issued by ESMA, which is this authority, with regards to the different, let's say, states and how they are applying their grandfathering time frame. So, because I saw some people who are here and are coming from different jurisdictions, so it's interesting to know that, for example, you have countries like Hungary, Poland. I think we have someone from Poland as well. Slovenia, Finland. They are applying a very short grandfathering period. They are applying a 6-month grandfathering period. Then you have countries that are have claimed and are even, let's say, recognized to be MiCA already ready, like Malta, that went for the maximum period still, although ESMA suggested that it should be less, a period of 18 months. Probably they were envisaging that they would have a huge, let's say, amount of applications that would need to work through, so in the interim want to let the operators that obtain a license under the VFA framework to operate. But what is important here to note that now that MiCA is applied and enforceable, it is not allowed to promote your services within other member states apart from the one in which you are licensed until you get the MiCA license and you have a MiCA license that is passportable in all member states. So I don't want anyone to be under the impression, then life goes on, because we can still operate with our current license. You can, but only within the country in which you are licensed. So whether it is Poland, Malta, Italy, whatever part of the EU you are, it is only there that you can promote your services and not in other jurisdictions. I would like to share with everyone the list so that everyone can check the different jurisdictions and their grandfathering periods. In fact, I am putting it in the chat right now, and like that, everybody can check it for their own selves and find your particular jurisdiction and understand how long you can keep working under the grandfathering clause. I hope I do not lose you now, and because most of you will go and check it, and I will continue about other points. So we were mentioning being present in Europe, and depending on which jurisdiction, you actually have a grandfathering period. Once that is over, then you have to either be MiCA compliant or else you have to stop the operation within that jurisdiction. Then there is capital requirements that we have to make sure that are in line. Why? Because the way that capital requirements are calculated is not only a minimum of, because it starts from 125,000 depending on the type of service you are offering and different service levels, it can increase or decrease accordingly, but it is also based on the amount of expenses that you intend to incur and that you plan to incur in your business plan or according to your current activities. So that is a calculation that must be done, ensuring that you have financial stability, and most important, what MiCA establishes is consumer protection. The main scope of MiCA is always to protect the user and to make sure that the companies that are going to be offering the services under MiCA are adequately supporting their claims or their services for the end user, never to end up in a detrimental position of having putting their funds and not being able to liquidate those funds eventually. But apart from being present with an office, there is also an element of corporate governance, and this is something that I wish to discuss. So the authorities, and this is how they are assessing now under MiCA, the new structures that are being applied for under MiCA must have competent persons and fit and proper officials who are not only now the UBOs or the shareholders of the company, but also the structure of the company. So it's not enough to get an MLRO and to apply under MiCA and say, listen, you know what, I have a local MLRO, so please approve us. That is something that is of the old regime. Malta was never in that regime, but certain jurisdictions who had a lot of these licenses in this space, in the crypto space, have now changed completely with MiCA. This is one of the most radical changes. Why? Because the fit and proper criteria extend to the members of the management body. So you are having to show qualifications, experience, and integrity of each and every person who is in the management of the GASP in question. You cannot just simply disclose the shareholding and having one MLRO and say, this is my structure. You have to now explain how your structure is good to manage, 1, the legal aspect, 2, the compliance aspect, 3, the financial aspect, 4, the operational aspect, 5 is the customer aspect, And there is definitely the AML aspect that is very high in the priorities of MiCA. That all these do actually even converge with other sets of regulations. You mentioned the travel rule. That is not something that comes out of MiCA, but yes, it is implemented within the same time frame, is uh, also important. It comes from FATF requirements, but it does tie in very much with the element of compliance. So you don't have to only be compliant, let's say, with MiCA, but MiCA will establish, the national competent authorities will establish that you have the proper structure that can make you compliant with all the rules and regulations that you are subject to, such as, for example, AML directives that are issued by the EU on an ongoing basis. You also have to have a risk management framework. So many, let's say, licensees are not used to the approach of starting from three steps. First one is having a national risk assessment, which is something that every member state does and issues publicly so everyone can access that. From that, you create your own entity business risk assessment. And from the entity business risk assessment, you create a customer risk assessment. These risk assessments have to then be integrated completely in your structure when onboarding customers. Now, some people ask when we are helping and assisting as well in such MiCA compliance, how possible is it that we carry out a customer risk assessment for each and every customer that is onboarded? It is absolutely necessary. It is not something that you can get away with. So if you don't implement the right integrations, technology, and automation to make sure that when a customer is being onboarded based on the different criteria, and there are mainly four pillars that fall from the AML obligations, which are the nationality, the customer type, the transaction requirement, and the interface upon which you are onboarding that customer. You have to have automations that put together the risk that emerge from these four matters, giving you a score, and based on that score, whether it is the geographic risk, whether it is the customer risk, interface, or product, you can then decide whether you're going to apply what is known as CDD, SDD, or EDD, which is customer due diligence, which is the standard, simplified due diligence, or enhanced due diligence. And the only way you can do that is based on the result of your risk assessment. And the regulator, which in this case wouldn't even be the NCA, but would be the financial intelligence units of each and every state, or in certain cases, the national bank that would have the same authority, would come and review on an ongoing basis your compliance with this requirement of conducting customer due diligence based on your risks. The same applies for what you mentioned before, the transaction monitoring tool. If your tools are not integrated with an automated, let's say, algorithm that bases its transaction monitoring on different aspects, and namely, I can easily mention three, which are the pillars here again. One is comparing your profile, your customer profile, with your customer activity. And then if there is an element of imparity there, you have to check. Second one is comparing your customer activity with your customer activity history. Because if you have a lack of matching between what you usually are operating with in the system and what you are doing in this operation today, then you have to flag it. And thirdly, there are certain basic rules, such as, for example, large amounts, or, for example, high risk destination funds, or high risk receipt, high risk remittance of funds. These transaction monitoring tools have to be implemented in a way that makes it impossible if you have high volumes of transactions that are being done manually. So all the things you mentioned before, I know I am linking a bit with what you said, Vadim, but I'm explaining how. Because you told me your experience as Kyrrex. We thought it's going to be easy, plain sailing. We're going to shift from VFA, just going to MiCA. But when you break it down into all the policies and procedures, and from those procedures, what technology you need to implement for it to be automated, it is a different story to what you think of just being compliant with MiCA. There are safeguards, as I said before, that protect the customer, such as you have to be liquid, such as therefore definitely you're going to look at a company that is constantly carrying out two types of audits. So you have the financial audit taking place annually by an auditor, that is approved by the regulator, and then you have an internal audit that goes on a cycle basis. So, for example, every quarter or every 1/3 of the year, you would have a thematic, and based on that thematic, they carry out an internal audit, and the internal auditor would be then sharing these results with the regulator. Why? Because the only way the NCAs can make sure that the licensed entities are being compliant with MiCA requirements is by them relying on third-party independent entities that are carrying out internal audits on the licensees. And these reports are shared directly with the regulators, who can then assess that, after all the policies and procedures emerging from MiCA for CUSPs are actually being implemented. There is also the requirement to safeguard clients' assets, so you're constantly required to keep completely apart proprietary assets that are the company funds. Even if you make profits and if you reconcile on a daily basis, you must ensure that you are then separating what is your client's assets and what is your company's assets. And for that, again, hot cold wallet management and internal reconciliation and reporting is extremely important. Why? Because the only way you can have internal auditors and board reporting that ensures it's compliant with these requirements is if you have automated and updated reconciliations that are easy to be followed and understood by everyone from the board up to the auditors. So it's not just uh, an internal matter. So what you're seeing with being compliant with MiCA is a very tedious and high quality or high standard process. In fact, we also do not expect regulators to be issuing MiCA licenses in the hundreds per week. If you look at what has happened so far, okay, you can also find online, this is something that is publicly available, a list of the current, let's say, regulated entities. So if you enter your ESMA domain that I sent before and you go to the main site, you will also find that they are giving an interim MiCA register. This interim MiCA register is going to be available for the first 2 years until mid-2026 for the first year and a half to give everyone clarity on who is achieving MiCA. Why? Because it also has a list on the asset reference tokens and the electric token issuers who are compliant with MiCA AMT, sorry, because I got stuck. Who are compliant with MiCA and who are not, and also non-compliant entities. They have a list that is being issued publicly. These lists show you what has happened so far. So we know and we have heard that in the Netherlands and Germany have issued a number of licenses, but the numbers are like 4 or 5. The same with Malta. We know that they have issued a number of licenses, but so far it's like 2 or 3. So, and this is looking at something that has started from the 1st of January. We're on the 28th. It is not something that national competent authorities will be issuing, as I said, in the hundreds per week, because it is very voluminous. It is very, let's say, intensive to apply for the MiCA license, and all these matters need to be established. So, be it all we said about the establishment in the EU, be it the initial capital, the governance and the management, the fit and proper criteria, all the operational requirements and internal controls, your risk management function, ensuring that your funds are segregated, your reconciliation processes, internal auditors that you have appointed, external auditors that you have appointed, that you have best execution policies for the customers when you are actually carrying out their orders or receiving and transmitting orders that they give you. And then they have to assess all the policies and procedures that you put in place. There's the AML and CFT aspect, which you have covered with your Know Your Customer, Know Your Transaction, and we have touched upon now a bit between us. There is reporting requirements. You must make sure that you are adequately equipped internally in your structure to do so. And then, apart from this, just not to make it too much, but it is the truth, ESMA is also issuing on an ongoing basis what are known as either RTSs, which are regulatory technical standards, or ITSs, which are implementing technical standards. These are further specifying the MiCA requirements in terms of implementations. So if there is something that is not extremely clear in MiCA, ESMA's coming in, issuing these standards that you need to follow to ensure compliance with the landscape, with the MiCA rules. So it is quite complex, and therefore the regulators will take time. But once we will see more licenses being issued, and also non-compliant entities being published, which ESMA has committed to, and I told you can find it online, we'll be understanding better what is, let's say, the reaction of the regulators to the market applications that they are seeing right now, and we'll get a better understanding of all these things that we have mentioned and how they are being assessed or apprehended by the regulators in question. I hope that answers your question.
Yeah, Kevin, thank you very much. And I have a follow-up question about not compliant entities you mentioned. So it will be companies who apply it but didn't pass the test, or it will be what does it mean, not compliant entities in
Okay,
terms of
non-compliant
regulation?
entities can vary because MiCA is also establishing a very stringent amount of penalties. Okay, and they vary because there are let's say there are 2 or 3 aspects of MiCA where you can be non-compliant. One is that you have any issuer of tokens that is going to be issuing tokens within MiCA must be under license, what we call an EMI, or let's say an electronic money institution license. This is a new requirement whereby you publish your white paper. The white paper is listed as well by ESMA, and therefore also all CASPs that are going to be listing assets must ensure that all the assets that are being listed on their platform are also MiCA compliant. So there are penalties that are for any issuers of these tokens because MiCA does cover both those and the CASPs. And there are then penalties for CASPs that breach MiCA provisions. They may face up to 5 million fines, or there's 3% of annual global turnover. Yes, there's also a suspension and revocation of license that is possible. So if any entity, for example, is promoting itself in another country without the passporting rights provided by MiCA, so under the previous regime, MiCA then allows the regulator to, for example, to stop their MiCA application from being granted. Or if it is being promoted before the passporting has been accepted, once again they are in breach. So there are these kind of rules integrated into MiCA. I don't think anyone is interested in the details, but this is by and large what they are. They range into millions and 3% of global turnover, and they can even lead to a revocation. So these will be also published online. So everyone will know that, for example, this exchange operating in Europe is not MiCA compliant and is being fined or is in breach and therefore should not be traded upon. This is all to safeguard the customers from being fooled into thinking that something is MiCA compliant. The idea of ESMA is that rather than you trying to go onto, for example, if you're in Malta, you go to the MFSA, which is the Malta Financial Services Authority website, to check if this platform that you found online and is being advertised is compliant with the laws. You go to one register, which is ESMA. That is the vision, at least, that they have. You will put in the name or you will check in the list, and if you find that it is there, you will feel safe to put your funds into this platform because it is MiCA compliant. And the same with those that are non-compliant, so that you will know that I should not be putting my funds here.
Okay, and okay, one more question. As I understand from the regulatory point of view, it will be no mem tokens in Europe available for the trading on centralized exchange. Yes, because mem tokens is right now it's huge trend, as you know, and it will be not allowed to add to the exchanges because they definitely will not have any white papers or documents available.
The problem is that mem tokens still fall under the scope of MiCA. So if they don't choose to have a white paper that establishes their utility, which I find difficult to for that to ever happen, then yes, there will be a problem for a token that is purely intended for fun.
Yes.
May still be subject to MiCA. So if it's traded on exchanges or made available to the public without it following the MiCA rules, there will be a problem. I think that they will find a work around this, because otherwise the market is going to be slightly disadvantaged, and I'm sure that the regulator doesn't want its market to be less than any other market. So any let's say investment trends that they will see is negatively impacting Europe, I'm sure that they will eventually be addressed. But for now, you are right,
Okay.
it's going to
It's
be, the practical impact is yet to be seen, because yes, I mean, especially those created as jokes, okay,
mhm.
they can still be regulated, because they can have, let's say they have significant market presence and they decide, listen, let us create a white paper and let us subject this for authorization and let us issue it through. But you have to see the financial as well implications. Is anyone going to do that? I doubt it. Let's see what's going to happen.
Yeah, from the most of the meme tokens created by like nobody holding the like majority of them. It's like widespread and
Exactly. So who is going to even take that responsibility? That is what I
yeah,
see as an issue. Having said that, MiCA, when it was being formed and people brought up this issue of meme tokens, the idea was, how can we ever say that we protect consumers if we're going to allow meme tokens to go through the window and they are the highest risk? So it's like telling me, create a huge legal framework to protect the consumer, but allow on the same platform the tokens that are the ones used the most to fool the consumer. It is
yes,
hard to achieve both in one go.
yes, of course.
But I'm sure they're going to have to solve this because of the discrepancy in the markets. I'm sure Europe will not be happy to see its market struggling. I mean,
Okay,
on any area, including this.
okay, thank you, Kevin. And let's speak about like possibility to work with Kyrrex under the existing Kyrrex license and what's how it can looks like and what we can offer.
To be honest, the idea, or rather the vision of the law, at least under the VFA framework, in which we are already licensed and happy to hold the Malta Class 4 license, we are already allowed to authorize, let's say, other users to use our license in order to promote their products that are aligned with ours, obviously, but under one condition, which is the customers are onboarded on our platform under our compliance rules and our legal obligations to comply with the laws, retaining full control on transaction monitoring and any reporting obligations that we have, and having no control being given to any other third party on whether the customer is reported or not. Once these are um, complied with, then the regulator has no problem whatsoever. In fact, we are only obliged to inform the regulator with any such entities that are making use of the license to promote the services under their own brand name, as long as they are disclosing in full, with full transparency to the end user, that in reality your funds that are being deposited and your trades that are being carried out fall under Kyrrex, or in this case, the legal entity under which we are licensed in that particular jurisdiction. So, what is the idea here? The idea here is that some third parties have, either because they have, for example, licenses in other jurisdictions where they are strong there in financial services, want to tap on the European market, are in a position where, for example, their country is in a 6-month grandfathering period. That means they only have 5 months left already. So in 20 weeks, they have an issue. They want to have a partner with whom they ensure that their EU operations can continue operating. They want to keep their brand. They want to safeguard their position on the market, but do not want to be in breach of any of MiCA regulations. So are partnering up with companies that are MiCA ready, that have submitted their request for authorization, that are confident, or at least we believe that given that we were MiCA ready as a jurisdiction and that we were fully compliant with all regulations under the class system that we had, the VFA system that we had, that they can benefit from using the infrastructure, the license, the compliance, the customer support, and the, let's say, entire setup without having to invest and create it all from scratch, through what we can call a sub-licensing aspect, but which in reality you do not achieve a license, but what you do is you use the license obtained by another license holder and disclose this to any promotion activities that you have, and within therefore your platform you can retain your customers, you can offer a MiCA compliant product and service whilst disclosing to the customer that you're using a partner platform for that operation. And once that is achieved, it makes it much easier to achieve the goal of still providing the product or service without having to go through the process yourself. Now, some entities are in the process of doing so anyway, so this is an interim, let's say, solution. Some entities do not even wish to go there because it's not in their interest. As I said before, there are entities who have strong markets other than the EU, but want to allow certain transactions, especially when it comes to access to fiat in euro, then you want to offer that to your customers, then having a MiCA compliant partner is definitely a plus. Now, we are MiCA ready, not yet MiCA compliant in the sense that we are waiting for the authorization. As I said, only 3 licenses so far were issued by the regulator, and there are tens of them waiting like us. So it's a matter of time, but yes, we are MiCA ready, and therefore we believe it's a solution that can be offered to any partner who's interested to talk about this option.
Okay, thank you, Kevin. We have a question. I believe it's regarding to your speech from
Where is it?
Ninoslav.
Country?
It's in question section.
Question section. Ah, okay.
Yes.
Certain specific requirement. Internal audit. Sponsorship based knowledge could be internal. Okay, it depends on the size of your operation and your regulator. In the case of, for example, lower numbers and lower volumes, and if you have a robust enough structure, so you're going to have a chief risk officer or let's say a board director with a regulatory and compliance, let's say, committee that is going to assume the role, and your regulator is happy with the internal audit function being assigned to that committee, and within it there is a person who's going to be appointed an internal auditor, and they're happy that they are fit and proper, yes, you might not be required to outsource your internal audit. However, I can talk from experience that when you start growing your operation and the numbers do grow, the regulator feels more comfortable to outsource that internal audit operation so that the party is independent and objective in its reports that it provides. Is sub-licensing under MiCA explicitly specified? I don't think it's under MiCA regulation. It is something that is specified under the VFA rulebook that we follow, which is MiCA ready, as I explained. And yes, we have discussed it with the regulator. Yes, we have discussed it with MFSA. I am answering both questions.
Okay, thank you.
Sorry, I had to press start live answer and start live answer.
No.
Because I have
okay. Okay, good. So yeah, we are on the Q&A session, and in case somebody has additional question, we have a couple minutes to answer. But in general, I just want to say thank you, Kevin, for this, for attending this webinar, first of all, and to answer my questions, because we are at this moment, like in the very beginning of the interesting year of changing overall, as I can see from the even in the USA, it's right now a huge shift in regulation approach, and you from the regulatory point of view, European Union on the edge of the like, that's not technology, but to approach to the regulation, yes, and we will see changes in market overall, and I hope it will be positive changes, and it will allow to more like market penetration, deep market penetration, and offer, for example, to pay for the services and goods in crypto all over the Europe without the same as with credit card. So thank you, and see you next time. Have a good day, everyone. Don't forget to contact me and Kevin over LinkedIn or email for additional like opportunities, and I will be happy to book one-to-one meeting with you over the Calendly link. So thank you.
Thank you, Vadim, for the time, and thanks for everyone. It was good.
Yeah, guys. Thank you. Bye.